GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is real estate consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks a lot for having me back, Jim.
The first question here has to do with the BC foreign buyers tax for the greater Vancouver area. First of all, was that tax needed? And now Ontario's looking at the same thing. Do they really need one in Toronto or for the whole province?
Okay, so that is a bunch of different questions. Did BC need it? BC didn't. The foreign buyer tax, as I've said on your show for a year now, had no impact on your market's downturn. Your market had reached a point where it was unsustainable. The price growth was unsustainable back in the spring of 2016. The market was already converting at that time downward into a correcting market. What the tax did is they applied the tax, and when the market turns over again, in other words, when the market starts to finally rebalance and start going a little bit upwards in price movement, that'll keep the foreign buyers from re-entering the market to a certain degree.
Of course, they could just rescind the tax.
Yeah, the tax that they applied was an incorrect tax, and because when you're looking to tax foreign owners of your real estate, in other words, you want to preserve your existing housing stock for Canadians. You want Canadians to be able to own a home. If that is the underlying principle or the strategy that you want to apply, a simple 15% of foreign buyer tax will have no bearing on the market, as it has had no bearing on the Vancouver market up until today. Everybody else can pretend it did, but the data shows that is not true. What they needed to do is, first of all, in that case, your initial on acquisition, your foreign buyer tax should have been double what they said. And so instead of a 15% tax, it should have been a 30% tax. The reason you want a 30% tax is in British Columbia or Vancouver is when you look at the historical price trends in British Columbia, you need a 30% increase just to eliminate that 5-year window of house price appreciation. So the people that mistakenly bought in British Columbia in 2016, they're going to experience a house price correction. Once that house price correction is fully flushed out, going forward from that moment in time, and assuming the housing stock in general continues to increase, in other words, builders continue to build new homes at the rate they have done for the last 25 years, you need to see about 6% annual house price appreciation take place just for someone to break even. So that's at a 30-year rate, you're looking at, for the sake of the argument, 5 years of house price growth to wipe out that 30% tax. So that's number one. Number two is you also have a tax applicable on liquidation. So when people want to liquidate their BC home, if they're a foreign owner, then there needs to be another tax implemented at that time. And that tax should be, again, somewhere between 20 and 30%. What this means is the only people who would actually buy Canadian real estate as a foreign buyer is someone who's going to hold on to the property for a long period of time, which either means they're going to move here and contribute to society through taxes paid of some sort or another, or they're going to lease the property out to someone and they use it as an investment, whereas the investment can be taxed as well as the the person who is going to live in that house, they'll be paying their regular tax to the country. So those two taxes need really to take place. There really should be a third tax implemented, which would be the vacancy tax that was implemented by the city of Vancouver, but it needs to be at about 6% a year. So in other words, if you want to hold a property vacant, then not only are you going to be subject to a 30% tax when you buy it, a 20 to 30% additional tax when you sell it, but also the years that you carry it vacant, you're going to be a tax is going to be applied to it. Those are the three taxation methods. We gave this solution to David Eby from the NDP when the British Columbia Liberals brought out the policy that they brought out. We gave it to him specifically because we couldn't trust the BC Liberals the way that they were handling the housing market out there. So it's better to give it to the opposition and let the opposition do what they want to do with it. It doesn't appear that he forwarded this or that the NDP accepted it in their policy. That said, our strategy for the government to implement a proactive foreign ownership tax, which doesn't hurt the foreign owner. In other words, it still allows them to own real estate, but it also protects Canadians. It ensures that Canadians are not losing housing stock to people who have nothing to do with this country.
We'll have more with Ross Kay right after the break.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ross Kay. Ross, we both knew the second that they brought in this foreign buyer's tax in British Columbia, there was a workaround, and we're hearing that it's actually being used. What is that workaround?
Okay, so again, the workaround, I wouldn't go public with this back then. Again, I gave this to your local NDP, so they have this, they have my emails as I have the emails that I sent. There are two actual workarounds that were available for foreign buyer tax, and I've heard one is already being implemented. Number one is to have the property purchased by a Canadian corporation where the shares of that corporation are owned by someone else. Now, there is no way for the government to track who owns those shares. There's no way to track when it's bought and sold. You can even your Revenue Canada. You can be compliant with Revenue Canada, and no one really understands what's going on with the state of this ownership situation. So that is one way for foreign buyers to become foreign owners. But the more practical way actually for that to take place, because you don't even have to worry about jumping through a hoop. And the second way is actually for the foreign owner to be the foreign lender of the funds used to finance the property. So this is really the most proactive way for someone to bypass your foreign buyer tax. You see what happens when your government tries to do something when they don't understand how a market is functioning. They make mistakes. They leave loopholes. Your government specifically brought out a policy that was designed to allow Canadian banks, should the current owner, foreign owner of a home, decide that he's not going to pay the mortgage anymore and walk away from it because he's lost value, that the bank had the right to claim the property as they would in any foreclosure. In other words, the BC Liberals did not change your foreclosure rules in the province of British Columbia. What that means is, because they didn't change those rules at all, should you be the owner of a holder or the mortgage, or should, in other words, should you be the person or corporation who lent the money to the home owner, and that homeowner subsequently goes into foreclosure, you have the legal right to take that property back. At no time do you become a foreign buyer of real estate.
Brilliant.
So this is really the biggest loophole. All you had to do is employ a strategy whereby someone bought the property, you then financed it as a foreign mortgagor. You finance 100%. In other words, we'll lend you 100% of the money. Then at some time in the future, you foreclose on the property. No foreign buyer tax applicable. The price that you sell at the property at in the future is not taxed. Even capital gains are not applicable because the way that it's structured. You can minimize any tax payable to the absolute floor, bare minimum possible. This is strategy number 2 that you haven't heard about yet, but I suspect 10 years from now, you're going to hear was ongoing.
Ross, when Christy Clark went to China, she took a number of Chinese real estate agents with her, and she said it doesn't affect homeowners because they're only looking at commercial real estate. Does this not turn every piece of residential real estate into commercial real estate?
What is the definition of commercial real estate?
Exactly.
The definition, which she didn't tell anybody in these articles, or, again, they are too ignorant to understand, is that a rental residential property is a commercial investment. It is taxed by Revenue Canada as if it is an ongoing business, or it is owned real estate for the purposes of generating rental income. Thus, it is a commercial venture. So either she was ignorant or 100% misleading in when she described what commercial real estate is. I have many clients from the old days who owned residential real estate as a commercial investment. They also owned commercial properties as a commercial investment. But it still is a commercial investment. It is a business. This is what wasn't discussed in this meeting, when she used the term commercial, and it's what every single person associated with that trip has been silent on till this day.
We'll have more with Ross Kay right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ross Kay. Ross, the BC Real Estate Association released their provincial numbers for March, and we are not seeing media outlets in BC report what you've been claiming is going on. What do you read in their numbers, and what can our listeners do about it?
Even the flawed BC Korea numbers, if you just look at their own numbers and you read them properly, it shows you that British Columbia has already experienced the single greatest provincial house price correction in the history of Canadian real estate. Now, what I'm going to tell you is you're only seeing 1/4 of the damage that has already been done. And you're going to see the speed to which these market corrections being announced are going to start taking place right now. So the British Columbia Real Estate Association was claiming a small gain, decrease in price in the province of British Columbia, And in the same sentence, they tried to pretend that that was a result of a shifting sales mix away from ultra-luxury class homes to condominiums. Okay, I'm going to tell you there's a certain amount of truth in that portion of the statement. The portion they didn't continue to add on is, because they're ignorant to the way housing markets function is that a housing market, no one segment of a housing market ever corrects. There is no place in the history of real estate in North America of any time where a single segment of a housing market, residential housing market, corrected. And if they can find one, they can present it and prove me to be a liar, because I know none exists. Every single housing market throughout history has been measured by the average selling price, regardless of how the sales mix is constantly shifting. And the sales mix, listeners, are constantly shifting. The reason you have a housing bubble in the first place is because the sales mix shifts. It shifts away from first-time buyers, and it starts to include more and more trades of real estate in the average selling price. This artificially inflates the average selling price, but is presented to the public as if this is a truthful representation of the market. And it's universal in how it's communicated. Every news release, CMHC, everyone. So the fact of the matter is, folks, in British Columbia, even using the British Columbia Real Estate Association's own data, not the correct data, their data, you have recorded already a $36,000 per home drop in home equity. That means $53 billion of lost net wealth in that, using their own metric. When you expand it out to what's going to be reported months down the road here, which is the damage that really is already done, as I told you before, you're already over $212 billion. That's what did not get reported by the Real Estate Board of British Columbia, and that's what the public has not been told, and that's why people still believe this myth, these fraudulent claims that housing prices are still increasing in Vancouver, when in fact you just set a historical record for house price correction.
With the 200 billion plus loss in home prices, how did you calculate the number, and why does this matter to our listeners?
Well, we calculate the number because we monitor the home ownership stock. So we've monitored the home ownership stock now for over 30 years. So we know exactly how it's composed, and we know where the average selling price is, where the average home is sold. So we know that in May of 2013, when this current cycle started in British Columbia, your first-time buyer's share of the market was about 17%. We also know that in March of 2017, that share had shrunk to below 9%. Now, if you go to media reports, you will find first-time buyers saying they're unable to buy because housing prices are too much. That was true. Then how come someone didn't say, well, if we start removing lower-priced homes from the average sales mix, doesn't that mean the average selling price is going to increase? And since your benchmark price is 100% parallel to the average selling price over time, when you correct for the difference in times that it's recording, then all of your benchmark prices, sooner or later, are going to correct back to that as well. How come no one told you that? Why we're literally over, I think we're looking at 150,000 families allowed to go out and buy a house using faulty housing data. Why? Why did you have all these news sources of crazy 60%? Why did your property taxes go up? We warned you on this show. Last year, your property taxes were wrong, that you were going to be overtaxed. We have just been proven that that's true once again. And this is the beauty of real estate markets. They function on a linear track that you could run any train down because there is no way it can be diverted.
You mentioned housing markets correct in stages, and you said Vancouver's in stage 2. What is stage 2, and what signals can the average Joe use to check out to see again what you're saying is true.
Okay, so in Vancouver's case in particular, and I will make it easier for everybody, instead of talking about actual Vancouver, which includes portions of both the Real Estate Board of Greater Vancouver and the Fraser Valley Real Estate Board, just look at the Real Estate Board of Greater Vancouver stats. You are going to have gone full negative. Now, what full negative means is that if you purchased your home today, if you had purchased your home a year ago, it is now worth less than what you paid for it that year ago. So your house price is full negative. You are losing money on the house that you bought a year ago. That is what's called full negative. It takes a housing market between 6 and 10 months before the rollover in the marketplace shows up as a full negative or a full rollover in housing prices. Stage 2 of a housing market happens when that rollover takes place. That rollover in Vancouver actually took place in the second week of April, which will be reported in sales numbers sometime around the 15th of May when Korea releases their data for the month of April, which you will record in your benchmark prices somewhere around July. All people have to do is this. Check your benchmark price in Vancouver that the Real Estate Board releases around the 2nd or 3rd of May, which will be for your April price. And I'm just going to scroll down here and I'll let you know what exactly that number should be because we track it. So in other words, the 12.7% increase they claimed the benchmark was still up in March was actually recording the average selling price back in November. What we know is that the following month of January, you saw a 3% drop in average selling price. So that 12% drop should now drop to 10. Then it's going to drop to 6, then 2, and then it's fully negative at 0.46. Okay, you're not going to hear about that probably until July, and that's going to be a shocker to everybody out in Vancouver, and you're going to hear more crazy claims by the real estate boards because they don't know how real estate markets work. This is unavoidable, folks. It is already done. It takes 3 to 4 months for you to hear the damage. The damage is getting worse and worse and worse each day. Unless you're taking action in this marketplace to reduce the damage, or if you're foolish enough to go out and buy a house today when housing prices are dropping each and every week, then you need to find someone else to get your real estate insight from, because you're getting it from someone who has no idea what they're talking about.
Is Victoria or Kelowna or any other area in BC in some stage of correction, or are those markets still growing?
Great question. So let's go to Victoria in particular, because what you're hearing out there is that housing prices are skyrocketing. There is not enough listing inventory to keep up with the demand. Folks, your sales numbers have dropped. It has nothing to do with supply and demand. Your market reached exhaustion. It could no longer support the price growth that has been ongoing. Exactly the same as happened in Vancouver last year is now happening in Victoria. First sales start to dwindle, and then months later, average selling prices start to drop. And then months later, all of the housing prices start to drop. So if you're buying in Victoria right now, you are buying what is classically called peak price. You are buying at a moment in time when the market has already rolled over its first stage, not rolling over in price, rolled over in terms of the trades that are ongoing, and you're purchasing a house at the worst time possible. Now, I'll tell you, folks, every single real estate market in Canada since 1980 forward has functioned this way. None of them have been anything different. I don't care what anybody tells you. We have the data to back it up. The only reason I go on this show is to save families from losing hundreds of thousands of dollars. That's the only reason I bother coming on this show. I can sell this information to anybody. I come on here to let your listeners know they need to start getting advice about home ownership, and they need to get it from someone other than they're getting it from right now.
We're continually inundated with suggestions that supply is low, and that's why sales are down in BC. Yet at the same time, we hear in Toronto, where sales are at a historical high, that that's not the case. What's going on here? What should people believe?
Right. So someone uses the same metric, months of inventory, to justify the fact that sales are down in Vancouver. In other words, oh, we don't have enough houses. And at the same time, the same argument is being used in Toronto. Oh, we don't have enough houses, so our housing prices are going up. But at the same time, in Toronto, house sales are going up. Sales are hitting records. So you got a declining sales market in Vancouver, an escalating sales market in the GTA, and they have totally different bearings on the prices. What is a consumer to think? You should think this. Call up CMHC's representative and ask them to supply you a chart that they have proving months of inventory or new sales to listings ratios has any correlation to price change at all. Ask them for one piece of data, one chart. You know, they're a government body. They have to give it to you, folks, and they would gladly give it to you, except they don't have it. It doesn't exist. It's a myth. The only thing that measures supply and demand in a housing market is demand. How many buyers are out there that are willing, able, and ready to buy a home? That is a metric that does not exist anywhere in real estate study except with my firm. We have a number called days of demand, which says at the current pace of sales, the number of home buyers that are actively out in the market today that are willing, able, and ready to buy a home, how many days will they last before the existing buyers are gone? It is a metric that explains Vancouver today, and it explains Toronto. Because in Vancouver, last spring, you were down to about 57 days worth of buyers. That's all that was out there. That's how active your market was. Now, you have 199 days worth of buyers. That's right, folks. Your prices are going to keep sliding because the buyers are holding back. They're not buying homes. In Toronto, it's just the opposite. They in the last 2 months, they have just set a record for the GTA. They've dropped down to about 34 days of buyers. So they only have enough buyers out there in the marketplace to sell 34 days worth of sales at the current rate of sales that is ongoing. That is a record. Now, you got to remember, the GTA market is basically 3 times the size of the market, the Greater Vancouver market. So each market, the number of days varies what's relevant to that market. But the days of demand, which measures demand, tells you what's going to be happening with your marketplace and why prices are going where they are. Days of demand, you have an infinite supply of homes. If someone came in with $1 million and you owned a $1 million home and they said, I'll give you $10 million for this house right now, you would sell it. You would have to be an idiot not to. Okay? So this myth about supply, months of inventory, new sales to, new listing to sales ratio, it's a myth because it's not measuring what the actual supply is. The actual supply is every single house that exists in your marketplace. A buyer can go with a check and knock on the door and say, I'll give you 3 times what your house is worth, and your house is sold. It doesn't. But without that buyer, no house sells. What's happening in British Columbia and Vancouver right now is that the buyers are not buying. Don't listen to this nonsense from the real estate board. Unless they release the days of demand, you cannot believe anyone. We've calculated it for 40 years. It is an ongoing metric. Actually, you know what? What I'm going to say is this, Jim. All your listeners, go to Google when you get off the phone here and type in home buying metrics. So everybody can find home seller metrics. Go try to find one home buyer metric anywhere in a Google search. You're not going to find any because they don't exist. That's because until 2005, it was illegal for any real estate agent in Canada to represent the buyer side of the transaction. And the Real Estate Board of Greater Vancouver, Fraser Valley, British Columbia Real Estate Board, they are still using the same metrics they use in a seller-only representation market. They have never even clued in on how you need to develop buyer-side metrics. We use buyer-side metrics because we know those are the only ones that actually matter.
Millennials now have the fear they'll never be able to own a home like their parents did. What advice would you give them, or could you abate their fear?
Yeah, I can abate their fears. You are just simply going to have to own your home in a totally different way than what your parents did. But I'm going to go further. Your parents had to own their home totally different than what their parents did. It is a generational shift in proactive homeownership strategy that is always required to take place. When you look at the home buyer who entered the home market in 1980, 85, 90, those people were assuming they were going to carry a mortgage at between 10 and 15 to 20% for the 25 years that they were going to own the home. They were assuming that on the day that they bought. Now, they got lucky because they purchased a home in an interest rate cycle where interest rates for the homeowner dropped for 40 years. So every single time they would look to move or renew their mortgage term, they always benefited from a lower interest rate. It's only like 3% of homeowners during that period actually got caught in the rotation where for a short period of time, maybe a year or two, they would have had to pay a slightly higher interest rate at renewal. But it's only 3% of that happened only 3% of the time. This group of millennials are simply going to be owning their homes in a rising interest rate environment. Whether it's a small rise or a stronger rise later on years from now is not relevant. What's relevant is you need a totally different strategy to own a home. And you need to understand that the principal payment portion of your mortgage is the actual investment that you're making. And if you're not doing that in the right manner with the help of someone like the wealthy homeowner to be your independent source, an accountant, so that the accountant is legally responsible to tell you the truth, your lawyer, so your lawyer can hold everybody else accountable, and finally your financial advisor, who now is shaking in their boots. They don't want to give you bad advice because the wealthy homeowner, your accountant, and your lawyer is all watching over their shoulder. As long as you own your home like that for the next 40 years, you're going to have an awesome life. You're going to benefit from home ownership. If you don't do that, you are going to be as hard-pressed as the person who purchased their house in 1990 and they didn't buy it in the GTA or Vancouver. Because those people, when all is said and done, their house, they've only broken even.
Ross, I'm telling you, we really covered the whole map when it came to questions about real estate today. And that's why we talk to you every week, because I'm sure when it comes to real estate, there never is an end to questions.
Yeah, there's a never, even our own, Jim, because, someone makes a small change in policy, Jim, and we know it's going to have a ripple effect across the market. So I agree with what you just said. The questions are unending. The only thing that I'll say is the beautiful thing about real estate markets and home ownership is it's on a set of railroad tracks, and you know where your destiny is going to be. It's just whether or not you look at your destiny and you decide which destiny you're going to end at.
Ross, thanks for chatting with us.
Thanks a lot, Jim. I appreciate you having me on.
My guest has been real estate consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at Talk Digital Net. Questions for the show or for Ross can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.